Are you wanting to do a leaseback option on the property that you're selling? Let's talk about it. Hi everyone, my name's Josh at FloridaMortgageDude.com, powered by American Home Mortgage. I've had a lot of questions and I've seen some contracts come in recently with leaseback options. So I wanted to share with you how lenders view these and how a borrower needs to protect themselves when they're going into a contract with this type of option. Now, a leaseback option is when a seller requests to stay in the property after closing for a specified amount of time. As a borrower, if you're purchasing a primary residence, there are some occupancy requirements we need to be aware of for basically all QM loans, all qualified mortgages. I'm talking about conventional, FHA, USDA, VA. They're all gonna require you to occupy that property within 60 days. So I've pulled up a mortgage here, which is a security instrument. Now, a security instrument basically secures a debt obligation or loan to a piece of real estate. So this is the general mortgage that we're gonna look at here. So as we scroll down, and we're focusing on primary residences right now, I'm looking for section 6. I've already kind of read through this, so I didn't want to bore you guys with trying to find this, but here is the occupancy requirements in the mortgage that you sign when you're purchasing your real estate. So it says borrower shall occupy, establish, and use the property as borrower's principal residence within 60 days after execution of this security instrument, and shall continue to occupy the property as the borrower's principal residence for at least 1 year after the date of occupancy. So essentially what this is saying is that if you buy a house as a primary residence with a mortgage, you must occupy that property within 60 days, and you must occupy that property as a primary residence 12 months after the loan date, the original consummation. Now this goes on to say the borrower must occupy the property for at least 1 year unless lender otherwise agrees in writing, which consent shall not be unreasonably withheld, or unless extenuating circumstances exist which are beyond the borrower's control. So essentially what they're saying with the remainder of that is that, let's say you do purchase a piece of real estate and you have a job change, or there's some kind of life change, and it's within that 12-month period of purchasing the home. Well, you would actually need to fill out a request form to basically have the lender agree to let you use that property as a different type of occupancy, whether it be investment property, second home, or whatever it is. So I actually have that pulled up here as well. So we're gonna switch over to our Fannie Mae selling guide. And this is the 12-month occupancy waiver request. So essentially this, and I'll leave this in the link in the description, but essentially this is the request that you would fill out if you're looking to change the occupancy requirements of your home. Now again, there's a statute of limitations here. So, I've had borrowers purchase a multifamily property as their primary residence, occupy a unit for a year, and then move on to purchase another piece of real estate and rent out the unit that they were occupying. So these are just items that you guys need to be aware of when you're signing, security instruments, putting property up for sale, those kind of things. The devil's in the details here. I also wanted to note that if you were purchasing a property as a second home, the guidelines are written a little bit different. So as a second home, we're basically doing the property purchase as a conventional loan, unless you're securing other types of financing. However, the majority of people are purchasing second homes as conventional loans. So we're referring to Fannie Mae and Freddie Mac guidelines here. So this is the second home requirements. The borrower must occupy the property for some portion of the year. You can only purchase a 1-unit dwelling as a second home. Must be suited for year-round occupancy. The borrower must have exclusive control over the property, so you can't give like a rental management company 100% or any control over the property really. But there's another interesting note here that if we look at that, must not be rental property or timeshare agreement, but it has a little asterisk here. So if we go to the asterisk, it says that if the lender identifies rental income from the property, the loan is still eligible for delivery as a second home, as long as the income is not used for qualifying purposes. So essentially what this is saying is that if you're selling a home as a seller to a borrower who's purchasing the home as a second home, you have a lot more leniency when it comes to these leaseback agreements. Now, if the borrower is purchasing the property as an investment property, essentially none of this is going to pertain to that because we could do short-term rentals, long-term rentals. However, if the borrower is looking to use the rental income towards the housing costs for qualifying, it must be a long-term rental agreement. And I'm talking about, at least 12 months. Sometimes we can accept 6 months, but typically we say that a 1-year lease agreement, then we can use 75% of the lease payment, rental payment, towards the actual housing cost, the actual mortgage payment of that property. If you guys have any questions about leaseback agreements, or if you have any questions about buying or refinancing your home, drop a comment below and I'll get back with you as soon as possible. If you found this video helpful, please like it. Consider subscribing to my YouTube channel. Follow me on Instagram, Facebook, all of those social media platforms. I would definitely appreciate the support. If you're already a subscriber or follower, thank you so much for your support. I really appreciate it. But that's going to do it for this video. We'll see you in the next one.